channel. I'm Doris and I'm here to share with you about my stock account update in today's market. Today my stock account earned $3,409. US stocks closed lower on Monday, with technology stocks dragging out the Nasdaq. Samsung, the king of memory chips, is now. It said that due to Q1 huge losses to consider production cuts, the industry is expected to see the price slump to continue into the first half of the year. Let's first take a look at my account. Today my account made a gain of $3,166, including the post-market price. That's a gain of 4.27%. Right now the net asset of my account is $77,247.89. Today the SQQQ rose for 6.05% to $41.2. The RV rose 3.59% to $42.22. The market showed an overall loss today, with most of the industries lose for more than 2%. The auto industry lost for 4.51%, and the internet retail industry lost for 3.34%. Dow Jones Industrial Average lost for 0.77% to 33,717.09. Nasdaq Composite lost 1.96%, especially because of technology stocks, to $11,393.81. S&P 500 lost 1.30% to 4,017.77. U.S. stocks closed slower on Monday, with the Dow ending a 6th-straight winning streak. The Nasdaq fell nearly 2%, led by technology stocks, while Tesla fell 6%. Investors were cautious ahead of the Federal Reserve rate hike on Wednesday and earnings report from Tesla's Meta, Amazon, and Google. The Dow fell 260.99 or 0.77% to 33,717.09. About 20% of the S&P 500 companies will report results this week, including McDonald's and General Motors, tech giants Apple, Meta, Amazon, and Alphabet. Short sellers Fuzzy Panda said it was shorting the Lucid Group. Boeing will expand production of 737 MAX by adding production lines on Everett, Washington, starting the second half of 2024. On the economic front, investors will meet this week with the U.S. non-farm payroll report, eurozone GDP, and inflation. Treasury Secretary Janet Yellen said stubbornly low inflation could pose a long-term challenge to the U.S. economy and policymakers. The Fed's Open Market Committee meets on Tuesday and Wednesday, and it's expected to raise rates by 0.25% points. As market will see whether the Fed will dovish, traders blame part of the rally this year for slowing inflationary pressures, which they speculate could lead the Fed to pause in raising rates soon. Both the European Central Bank and the Bank of England will announce their interest rate decisions on Thursday. With both central banks expected to raise rates by 50 basis points, markets are expecting to hear ECB's President Christine Lagarde on the next rate hike rise to measure the ECB's judgment on inflation trends and how much it'll rise in March. Investors also expect BOE officials to show that rate hike cycle is drawing to a close. Investors' investigation. Even after this month's rally, investors lacked confidence in U.S. stocks. According to the latest survey, most said the market has yet to bottom because of concerns about corporate earnings. In the latest MLIV poll survey, about 70% of the 383 respondents held this view, with 35%, the largest percentage, said the lows won't appear until the second half of 2023. Less than a quarter believe the stock market has bottomed out. The findings suggest that investors remain uneasy after the stock market was teared last week, with growing concerns about the earnings outlook as the economy slows. Nearly half of the participants said the key to stocks this week will be quarterly results for Apple, Meta, ExxonMobil, not the Fed's decision or any comments by Chairman Powell on Wednesday. Goldman Sachs sales and trading analyst Scott Rubner said in his latest report Monday that the current rally could continue into mid-February due to a return of share buybacks and unusually bullish signals when Scott Butner stocks fell on bad news. Scott noted the position trend has not changed this week, buying higher and expects the week to be another inflow as the U.S. stock index rises. Samsung, the king of memory chips, is said that due to Q1 huge losses to consider production cuts, the industry is expected to see the price slump to continue into the first half of the year. The $160 billion memory chip industry is suffering a historical collapse to even industry giants, Samsung, after oversupply, customer orders, and plummet chip prices. Samsung Electronics, the world's largest maker of chips, smartphones, and displays, is considering cutting DRAM and NAND chip production, citing a potential huge operation loss in the first quarter of 2023, South Korea media reported on Monday. Today, the news means Samsung will change its position of always producing as planned. In October 2022, Samsung executives said they would stick to their production plan and promote chip manufacturing technology to weather the oversupply industry and widen the technology gap between competitors. But news on Monday said that as the industry is likely to slow more than expected, Samsung is now considering following its rivals in cutting capital spending and production to support falling chips prices and ease the supply glut. After the news, Samsung will report new results for the fourth quarter of 2022. Samsung's fourth quarter guidance released earlier this month shows that operating net profit was expected to fall to 4.3 trillion won from 13.87 trillion won in the same period in 2021, down nearly 69%, or more than two-thirds from a year earlier, while sales fell about 9% to 70 trillion won. At the same time, media estimates the guidance meant fourth quarter earnings could hit at least 8 years low as the global economic downturn hit Samsung's core business of chip production and consumer technology. Samsung may be the relatively only memory chip maker to diversify its business, but its semiconductor business also faces loss. Media said on Monday, Samsung had so far rarely evaluated the near-term prospects of the memory chip industry. Although Samsung is quiet, the industry is already experiencing an unprecedented crisis. Samsung and its rivals are losing money for every chip they produce, and they expect their combined operating loss to reach a record of $5 billion this year, the media said. Meanwhile, inventory levels, a key indicator of demand for memory chips, have more than tripled to a record high, equivalent to 3 to 4 months of supply. Even worse, industry forecasts are predicting that the collapse in chips prices will continue into the first half of the year. That's even worse for chip makers that are already looking for cut investment and layoffs. Some industry analysts expect the average price of memory chips used in smartphones, personal computers, and televisions to fall by double digits in the first quarter, after the prices plunged more than 20% in the fourth quarter from the third quarter. Prior of Samsung's earnings report, Macron, Western Digital, South Korea's Hynix, and Japan's Kaisha all announced plans to either cut investments aimed at expanding production capacity or cut production to avoid increasing oversupply. In December, Micron said it will cut factories and equipment for new plants, said Greg Roll, head of the technology research at the South Korea brokerage HMC Investment and Securities, which is not normal. Citi's global market research reports that the possibility of Samsung adjusting its chip supply by cutting investment is increasing as memory chips prices fell more than expected, and its profitability could be pushed down below the break-even point. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.